We're always hearing housing inventory, housing inventory. We're not going to have a crash because there's not enough inventory. I don't know. Some smart woman told you there'd be enough inventory. I remember her name. Starts with a D. Hello, my C noters. How are you? We're going to go over all of the active listings. This video is going to blow your mind. It is amazing. I learned tons of information just putting this together for you guys. I couldn't even believe some of the statistics that I found. We're going to look at the active listings and break it down. A lot of things that are important with the active listings, such as non-owner occupied, how many are vacant, are they leveraged? Why are they selling? We're going to analyze the active listings and figure out where the problem spots are and why people are selling in this particular market, because inventory now is at the highest level of all year long. So I think someone told you right here is that my July breakout. No one's talking about July numbers. They're trying to sweep it under the rug because it was horrific. A bloodbath is starting to show up in the inventory now because there's no one buying homes. I'm sorry guys, it's not going to happen. They're not buying homes. It's unaffordable. It makes no sense, and inventory is going to continue to grow. And this is before any job losses. I'm going to show you how we can accomplish that and how it is going to turn on a dime. Yeah, I think so. Turn on, drop something the dime. It's just going to turn very fast. We're going to look at non-owner occupied, what makes up the active listings. And at the end, I'm going to show you how quick it can turn. I'm going to break out a market for you and you're going to be shocked. I was very, very shocked at the numbers when I saw them. Let's go over to the D-Money Cave. Please like, subscribe. And Eddie, if you ask me where another video is, this one was 6 hours of data. Pump your brakes. Please like and subscribe because we are trying to grow and apparently we need that. All right, peace out. Let's go. There's a new report out by Altos. I really want to go over the data that we have. We have new and fresh data. As an example from Batch Leads, that's where I got all of our quantitative and qualitative research today. You can get 1,000 free leads, sellers, or buyers from them utilizing our link down below. Here on the Altos report, you'll see, as I was mentioning before, that inventory is at the highest it's been with 495,000 single family homes for sale. Obviously, people want to see that at 1 million plus. You're also starting to see price declines when you're going to see major price declines. Here is, and I'm going to put a link down below to this spreadsheet as well. So you guys can look at it whenever you want to. As you're going into the fall, you'll see an uptick in inventory at the end of August, which I think we're seeing. But August is lower than July as far as home sales on an annual basis, 7% lower. What I did is I went in and looked at the top 50 markets and took the markets that are above July when I did this report last, which is great because we're starting to have trending data now as I'm doing this every month. But right around the same time last month, I did it for July. I took August, whoever was higher sales for August for active listings. Albuquerque was the first market of the top 50. We were breaking out active listings below market because we want to look at, okay, of the listings, how many are priced below market values, and look at opportunities or know if your market's in trouble if you plan on listing your home. You have the active listings. What percentage are non-owner occupied? How many investors do you have in the market? Are you saturated with investors where you know that you're going to have a nosedive as well? Ownership 3 years or less. We want to look at that unaffordability. Did people get into a home? We know that people are regretting purchasing a new home, especially at the height of the market. Can they not afford it? Taxes, insurance, inflation, everything is hitting consumers hard. Everyone. How many of those people are in trouble in what markets? And then I looked at vacants and pre-foreclosures, which aren't anything too earth-shattering yet. We can see the big numbers. Well, El Paso, Texas, that's amazing. I don't know if anyone's really talking about that market yet. 71% of their active listings are below market value. Wow. You come over here and you have 40% of their active listings, they've owned the home 3 years or less. Geez, you just bought a home in the past 3 years and you're selling it already? 40% of the active listings have only owned their home 3 years or less. They're underwater or probably close to it. I would guess with you take out real estate agent fees, closing costs, you don't have that much equity when you first buy the home, especially if you did a VA or an FHA loan. So that could be a lot of a high percentage could be underwater. So you have to look at that as well as an opportunity for investors. El Paso, definitely, that's just wild. 71% jumps out at you. Houston, that was another market. 53% of their listings are below market value. They're starting to price their listings properly, I think. 43% of their listings were non-owner occupied. So you could look at that and say, okay, Houston, do you buy second homes in Houston? Maybe. Foreclosures were high for Houston, but having that 1401 kind of stuck out as well. Houston was an area that I was like, wow, what is going on in Houston? Florida, you start to see finally some issues with Florida, and also Cape Coral up here. If you look, Coral, non-owner occupied, 81% of their listings are non-owner occupied. Wow. 50% of their listings have owned the property 3 years or less. Let's go down the line on that. That is all I believe unaffordability, or a high percentage will be. So you got Cape Coral, Paso, of course, again, Greensboro, North Carolina, Memphis was another one. You have Minneapolis, Naples, Florida. That's a huge sign of unaffordability, especially with Florida. You know, our insurance and taxes and everything is going through the roof. And Tulsa, Oklahoma, close to 40%. All of these that you can see on the spreadsheet, Memphis, go up here, Greenville, you can see unaffordability, it's creeping in to these markets. To own a home 3 years or less and try to sell it, it's tough. So please, 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 if you have to do a short sale, please give me a call. Let us walk you through how we can help you. You do not have to do a short sale. As I just gotta tell you my pitch on that because it drives me crazy. I just don't want you to do that. Give us an opportunity to walk you through how we can help you. The people that didn't make the list, but they're right on the edge, but as far as you got to cut off criteria eventually, or I'd be sitting here for 2 days doing this, is Las Vegas and Phoenix. They didn't make the list. Their active listings right now are not up month to month from July to August, when traditionally it should be down. I did not put them on the list, but I'll be watching them as well. Active listings below market, Austin, Colorado Springs, Houston again. Houston's really getting killed right now. That's another opportunity. If you have to list your property there, I'd probably hold on. Memphis, Minneapolis, Naples, San Antonio, almost 60% of their active listings are below market value. San Diego, California was another one. That's really interesting to look at. This was the 80% or more loan to value ratios. Of the active listings, what percentage are leveraged? Their loan to value ratio is 80% or higher. You look at this list, Austin is a market that has a lot of leverage, and the active listings are 80% or higher loan to value ratio. And everyone else is kind of in line. So you can, when that number comes out like that, you can see, you're like, whoa, where's that coming from? So Austin, big time, is the winner of that race. I'm sure they don't want to win that race. They're leverage. I'm going to be going to Austin soon. I can tell that. Non-owner occupied, same thing with Austin. You look at this and you say, okay, I would look at them for potential foreclosures coming up. Here you have a market. We know their inventory has been high for a while. They've taken a hit early on. You can see on here as well that their loan to value ratios are high and they're non-owner occupied. A lot of investors, a lot of people that probably don't live there, out-of-state owners, maybe they just walk away. I mean, that's another thing you got to look at. So we definitely want to track the foreclosures on them coming up. 33% have owned their home less than 3 years. Does not surprise me with those statistics. Same with Cape Coral. You can just see right here. So I'm going to leave this spreadsheet for you guys. Tons and tons and tons of information. Oh, another market too is Detroit. 74%. This surprised me. Non-owner occupied. Of the active listings, 74% are non-owner occupied in Detroit. Wow. Very interesting stuff in the housing market. I could spend all day. I could spend 3 days doing this because I love looking at the numbers and being a data head. Now, this is going to blow your mind. This blew my mind. I couldn't believe it. I put together one market. This is Charlotte, and this is the active listings right now in Charlotte, North Carolina. In Charlotte, this was crazy. I had no idea. There are 110 investors that are local individuals that live in Charlotte, 110 that own 2,500 or more properties. And I also put the criteria of bought in the past 2 years. Everyone always says we're not going to have inventory. There's 110 that live in Charlotte that have bought properties in the past 2 years that own 25 or 100 or more. Now, that doesn't mean they own them all in Charlotte. They can own them in other areas. There are 3,936 investors total that are out of state that own properties of 2,500 or more. What I did is I took Charlotte. Here are the active listings in Charlotte. I took one investor. Say one investor dies, one investor gets divorced. I'm not saying 2 or 10 or even 1%. I'm saying one investor. This is what happens to Charlotte. Do I need to say anything else? Do you think Charlotte's got an issue with inventory, or you think it's going to tank? I mean, guys, look, this is one investor if they sold their inventory. I mean, is this wild or what? I just couldn't believe it. I'm like, wow. So if you're in some of these markets or towns, I mean, you can just forget about it. Amazing. And this is one investor. Look at this. I mean, wow. I'm not worried about the housing inventory, and no one else should be either. What we need to be concerned about is saving money and getting through this market storm that hasn't even started yet. It hasn't even begun, and inventory is not an issue. I think I've proven that today. Hopefully, I've proven that to you. I absolutely adore you guys. I also left a poll in my community link for you guys. I want you to help me pick what I'm going to wear for Halloween, and I absolutely adore you guys. Peace out.